In this presentation, we will take a look at multiple choice questions related to financial statement analysis, going through those questions and then practicing test-taking skills with them. First question, generating future revenues and meeting long-term obligations is A, liquidity and efficiency, B, solvency, C, profitability, D, market prospects, and E, avoiding bankruptcy. Let's go through this again using our process of elimination. Generating future revenues and meeting long-term obligations is either A, liquidity and efficiency. Now note, if we look at these first four, we should recognize them because these are the groupings of our ratios. We got the liquidity and efficiency, the solvency, the profitability, the market prospect. So of those five answers, we could probably take away the last one, which isn't amongst the categories of ratios, that being the avoiding bankruptcy. So we can probably remove that one fairly safely and then consider which of our four categories of ratios is generating future revenues and meeting long-term obligations, that category. So of those three, liquidity and efficiency is short-term, so it's not that one. The market prospects, that's typically going to be dealing with market information. Remember, that usually deals with outside information outside of the company, usually the cost of the stock or the market price of the stock. So we're down to solvency and profitability. Of those two, the one that we're concerned with is solvency. Basically, are we able to pay off, once again, the debts? But now we're thinking the long-term debts as opposed to simply the liquidity, which we're considering the short-term debts. So final answer B, generating future revenues and meeting long-term obligations is B, solvency. Next question. Providing financial rewards to attract and retain financing is either A, liquidity and efficiency, B, solvency, C, profitability, D, market prospects, and E, avoiding bankruptcy. Once again, we have our four kind of scenarios or four groups of ratio type of analysis, four goals for the ratio analysis. The one that's not there is the avoiding bankruptcy, so we can safely remove that one and then go through our consideration of the other three. Let's go through it again. Providing financial rewards to attract and retain financing. So remember that the liquidity and the solvency, those are going to be our obligations, short and long term. The market prospects typically has to do with outside investors or investors into the company, and typically takes into consideration things like the market price. So we're left here with the C, profitability. Final answer C, providing financial rewards to attract and retain financing is C, profitability.